Hello guys, welcome to the Trading Parrot. I sent 2 hours ago an important time-sensitive update to my Patreon and YouTube community, and in this video I'm gonna disclose it publicly because it's very important, not just because of that, because it hasn't played out yet. So if you're watching this video, you can take advantage of the situation and potentially consider to take the same trade. We all have seen how both sides have been decimated in the past few hours. Bitcoin pumps, longs get excited with a breakout, and then they get liquidated. By doing that, shorts get liquidated as well. Every time we do that, we expand the range a little bit more to the upside, and we still have the stupid CME gap sitting underneath our feet. Well, guess what? Many people are thinking about that CME gap that is unfilled, and we need to talk about it today in this video. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. Can we get to stupid 1,000 likes? I think we deserve it, and that is my opinion. Let's go with the content. Today we have 3 news coming from Perplexity. We already say goodbye to ChatGPT, and we got 4 bearish, 5 neutral, and 4 bearish according to sentiment from 1 to 10. The first one is the Whipsaw that we saw on Bitcoin overnight, and it's not just overnight, the day before as well. Remember, I took a long from 108.7, put the stop loss at 109 break even, acknowledging the risk of the long, and we were spot on because price went to 112 and came back all the way just above the CME gap without feeling it. We took advantage of that. We took another long from 107.5, and I'll tell you later what happened. This is bearish because it pretty much is causing a lot more pain to traders, and thanks to that, guys, we are in extreme fear. And in this channel we focus on data-driven analysis. We do strong TA, possibly the best out there in all YouTube, with a track record of every single trade in a win for over a year. Just right down below in which channel in YouTube you get that. We are about to get 2 cups of coffee, slap ourselves in the face because we are in extreme fear. That is what in this community we do, and we do it with the intention of shaking off the fear. We need to be the only people out there that is arrogant, angry, longs. Yeah, there is blood on the street. What else can you do if you are shaking in a corner and you need a hug because, oh my god, I'm so sorry for you? You can go to a 1 million follower subscriber account, find your YouTube that suits you better. Here there's only winners. We got a neutral with the Bitcoin ETFs that are seeing 477 inflows in $1 million, but well, Trump insider raises short positions 234, and Papi Trump decides to say that he's gonna increase the tariffs to 155% to China. Is it not obvious what's going on in here? If you haven't noticed, you're probably living under a rock, or you really love Trump, and I don't want to be rude. I'm not against, I'm not supporting him. I am stating the obvious in here, that there is market manipulation. There are insiders, and if you haven't noticed, you probably also believe in Santa Claus, in dwarfs, or whatever. Bitcoin retest 107k support as Trump tariffs rhetoric continues to weigh on risk assets. That's again another neutral, so we don't have anything bullish coming from Perplexity. Dan says that BTC another failed push higher, which standed at the 4-hour 200 MA EMA, right back on the daily 200 MA after getting rejected once again. This line in here, we're gonna see that is also the VWAP anchor to the all-time high. It comes nicely down on the daily time frame in here, and we've been rejected from that same level twice. Now on the flip side, we have the one that is anchored to 74k, and it has been holding. It actually reclaimed it, so we are in the middle of a squeeze on the daily. That moving average from the all-time high and the one from 74 are squashing the price, and the 4-hour time frame is starting to show signs that we might see an expansion in the volatility anytime from here. And I'm not meaning the one in the 4 hour think about this is just lighting the fire, but you're about to throw that match into 100 liters of paraffin gas or whatever, and it's about to blow in your face. So this one in here is you just switching off the lighter on the 4 hour, but that expansion might get to the daily, to the weekly, or even to the monthly volatility. And yes, you are learning that here in this channel, and you still haven't hit like or written any comment, while at the same time you are the first person on earth realizing that from a reputable source. Alpha BTC really needs to hold here. We have this support being tested multiple times, the 107.4. Before it was really tough resistance, right? We spent many hours trying to break it. Once we broke it, we came into the resistance. That has said, hey, hold on the horses. There is an open interest level in here, which we hit yesterday by the dollar. Yeah, you watched the video yesterday. You knew that 114 had this level of open interest that got hunted by the price getting there. Now, guess what? More shorts enter at that level. So 376 million versus 271. So we have 100 million more now of shorts at the same precise level entering in here. Whereas below, I am not seeing the same bands heavy of open interest. So we still have a slim chance in here. Pay attention, concentrate to come back not just to 114, but we could kill two birds with a single shot. Should we go for 114 and then for 115 and get these two dudes liquidated? If we do that, we could use some help from the fair value gap up until 111 and maybe get into that 115. At that point, we are right next to here. So there is a chance that that extreme volatility incoming could be to the upside. We have paved the way with fat fair value gaps, with open interest crumbles, so Harold and Gretel can follow the path back home, hopefully not to the witch, and maybe we can do path number one. That is the one that I'm tempted to get some exposure with a long. Now, notice this, my long, if I enter again, I'm hedged by my short. I'm risk-free. I'm market neutral. Yeah, that's what the pros do. What if I'm wrong? Well, I'm hedging with my short. I enter somewhere around the area of the CME gap, or maybe slightly lower, which is the next conversation that we need to have. And maybe I'm wrong, and I ride the long at a loss lower, and I DCA from 95 or 85. Late, of course. Any move, time sensitive, you want to know it? You join my Patreon membership, which is just 10 stupid bucks a month, totally worth it. You get the summary of this video also sent to you via email. You get all the love from the parrot. We got on the daily CPI is this Friday on the 24th, and FOMC is next Wednesday on the 29th. All of this as we approach the end of the month. Of course, Trump wants to dump the markets because he's smelling that there might be some rally after. So he needs to let all his family and friends and supporters to inside trade a short. Then once they close those shorts, the market will be nuked and then he can rally up. I'm just joking. I have no clue if there's an insider or anything. It's just fun to speculate around these things. I am just bullying Trump, to be honest. Anyways, let's not get political. I don't have anything against him. Today's ugly reversal was a perfect example on why we prefer to sweep the lower liquidity first, and I'm still looking to take it out ASAP. Fortunately, new shorts were open and significant overhead liquidity remains. So I insist, in the past week, there's been a ton of shorts. I am looking for that juicy liquidity from 116 into 120k. That chunk there, I really like it and I'm really salivating. You can see me here. I really need a napkin now to get those bastards liquidated. But unfortunately, too many longs are entering with me and they're getting liquidated, whereas I'm getting stopped out in a small profit. That's the way you do it as a pro. BTC price action clearly shows signs of market manipulation. Smart money is trapping both sides, liquidating late longs, shorts before the real move starts. And we are here to try to identify what's going to be the real move. Of course, we are not going to be able to forecast it, okay? We don't know. We're going to find strong ideas. We're going to find maybe a bias, but that we are not going to trade it all in towards that bias because we don't have certainties. The way we're going to do it is we expose an amount that we feel that we can manage with risk management. By doing that, when we are wrong, we make still profits. Smaller ones, larger larger ones, it doesn't matter. Just wins in this channel. That's the way we trade. The order book heat map, according to CoinGlass, it looks this way. Between around 102 into 96, there is big chunks, and that is our risk. So whatever we do, we need to think that there is no bias. Even if we have a bias and we think 99% this thing is gonna go up, let me sell my house and put a huge $1 million position. No. Those are the guys that just lost $20 billion. You don't want to be that guy again. You need to think, what plan can I put out that if we go for 111, I make money, and if we go for 96, I make money, and if we go for 85, I make money? Do I need to prove I'm right to all those stupid dudes out there in social networks? No, I need to make money. That's all the reason I'm here. So focus on that. Focus on a plan. Use the last lemon juice that you can squeeze out of your brain, and let's figure it together. PA is absolute cancer. Only way out is to hold this range and build strength before sending again. Trump, new tariffs on China will rise 155%. BTC broke below its bull market support band. If price can regain the bull market support band, possibly we can have some upside. Income charts is talking about this parallel channel that we kind of maintained since the beginning of the bull market, and there you go. That's the similar setup: double top, double bottom, double top, double bottom. So it's implying, are we gonna get into 100k and possibly play the same book of sweeping 98, 96, something like this, and then another high into 150k? Well, the game is to get exposure around those levels, but prepare for a break of the parallel stupid channel, because we are in a topping year, and I will say we have 70% chances that we continue playing by the book, because that is the current trend. We need to leave a 30 to 40% chances that this still goes into 150. We can still take advantage of that, but we really cannot expose the same amount of volume that we did in the early market at 15k. If you want to expose the same and you don't have a risk management plan professional like the ones we do in this channel, you're literally preparing yourself to look like an idiot in front of your family and your friends, and even worse, in front of yourself. Gold investors rotating into Bitcoin in real time. And yes, we'll cover this, particularly the TA of gold is going to be really juicy, and the market general TA video separate that comes typically right after this video on weekdays, on working days. And Crypto, hey, hold on the horses. Why are you bringing in Crypto into this channel? That is haram. Bitcoin lost the final boss fight. Let's hope for a rematch. Otherwise, it will get ugly soon. All with full capitals. I understood that this guy was a cab driver before that learned how to trade, made a lot of money. Full respect on the amount of money that he made. Full respect that he has been sharing his losses and his wins. I'm not a fan of the TA. It's very simple. What I'm a fan of the amount of entertainment that he can produce. Apparently, he studied economy. Anyways, yes, this could be the case. It could be the case that we are about to get rejected there. We'll look into the weekly. We've been looking into the weekly. We already know that there is a head and shoulder somewhere around here on the weekly time frame. Not a perfect one, but with a target into 88k. Crypto Quant is pointing out and is reminding me something really important. Spot has been a big player of what's going on in this range. Okay, spot activity is good to have. We don't want to have a ratio between futures and spot, and there is too much futures, because that means that we are in an area that could turn into just a dead cat bounce. Those are speculators, short-term holders, and in the previous cycle they dominated this dead cat bounce with all-time high, and it lived very shortly after the previous high. It basically pinched, produced a double top, liquidity hunt straight into bear market. All this blue is futures dominated. If you haven't seen these labels here, spot dominant is yellow, and you can see that it tends to be around areas where we continue moving up. Now, there's a caveat. There are exceptions. Like, for example, up until here, you got spot dominant, but up until 55, and then you move to 69. So that's just 14k of upside if you want. And even worse, because they dominated also around here, around the 60. So that's just 9K to get that spot dominant period in profit. So we are not playing children games here. This is spot dominated up, spot dominated not up, consolidation futures, and then pump, spot back here and spot back here. So spot is good, but spot is not gonna be the thing that saves you from a bear market, in my opinion. It's good to be seeing that creates a pillar that potentially can act like this one. There was spot dominating the top and that didn't go to bear market, right? Big correction, can we get? Yes. Did we go to bear market? No. We bounced once more. Maybe thanks to all of this area being spot dominated and then profit taken from that spot in here and futures together taking profit, and that put the bear market. So in here, we get spot dominated. Are we safe for a correction of 55? No, we were not in here. Are we safe? No. Don't buy that hopium. The only channel that is going to tell you the truth, the only channel that does the full analysis. In this area, it just says, historically, market cycle have shown that phases of spot accumulation often precede structural recoveries. Now, do you agree with that now? Are you with me? Let's go to the next one. Axel says, yesterday there was a liquidation of both bulls and bears. The liquidation index rose above 3 sigma. So that's very high. There was a whipsaw affecting both sides. And what I read from that is not, oh, bear market is incoming. No. What I read from that is that market maker is somehow trying to take out both sides before the real move. Now, if you are still with me here, we're going to talk in the rest of the video of what could be the next move that we can do with our long. If you want to take that trade, consider joining Bluffing. You can claim 3,000 in rewards. Don't worry, no matter what deposit you make, you're going to get some cash back into your account using the link in the description. Let's have a look at what the community is asking. If you want to be part of these questions, you know the answer. Join the Patreon. Down below is the link. Eric is asking opinions on best entry point for a new long and likelihood of bouncing up again in view of also of the incoming rate cuts. I think there is a good chance that we go up and I want that exposure. I'm very tempted to enter in the middle of the CME gap. My only caveat to that now is that if you look at crypto Twitter, there is just so many people talking about that CME gap being the best entry. And right underneath that, right underneath 107, there is all the liquidity from 101 to 96. So I am not going to be able to tell you whether the CME gap is going to be the best entry versus going into the lower liquidity. And indeed, price is now 107.8, still not closing the gap. Could it be that we leave the gap behind? There's just too many questions. Maybe the best answer is just to expose half liquidity right now at support before the CME gap to front run those dudes for a third time. Then a little bit more in the CME gap, but not too much that you cannot handle if we are wrong. Samu, good morning. About general markets, what could be alternative assets to invest hedge in 2026, considering that everything is close to all-time highs? Not everything is above all-time highs. There are some assets that I haven't looked into detail yet, but I have in my to-do list to have a look, and it's for general markets analysis. But petrol and some basic needs, things that have been decimated recently or have been lagging behind, everything to do with tech. So we need to look in the big perspective what is currently being punished and if it's fair to be that punished and cherry pick from that. But it needs to be very quick, and I acknowledge that, and I haven't had the chance to do that. Yesterday we celebrate the birthday of my daughter, so it was really fun, but my to-do list is growing really fast. And remember, I am probably better trader than investor. I invest as a trader personally, so I look always into where to exit. I'm not that good for just dropping cash into some black box and then forgetting about it like most people is. And to be honest, those people with this sort of S&P and Nasdaq that we currently have and that we kind of take for granted, it's been the best performing strategy ever. But at some point you can get a 1930 situation, which is very difficult to time, and it can hit hard. Lara is asking, what are the biggest magnets right now, up and down, in terms of liquidity, fair value gas, and CME? Also looks like we are heading below first CPR support. where today we are kind of battling with the first support, which is at 108.261. So you can see that there is an indecision in here, a potential higher low incoming, and maybe an attempt to break the pivots, a second one because we already did one yesterday. Right now there is a lot of liquidity towards the all-time high range. Will you say it's too much money for the market makers to leave behind? How much liquidity has been left on the top end in cycles past? Eddie, that's a question that I will really love to answer, showing you the data. Unfortunately, trading different on the top time frame, which is the daily, reaches up to January 2022, and I ignore if they have a way to time travel and load past charts and see past performance. I think on High Block Capital they offer something similar to that, and I didn't have access to either of these tools at that point in the market when we were at 69. So all I have is the knowledge of liquidities throughout part of the bear market, and then this area in here. During all that phase I got really good at interpreting the liquidity pools. But what I'm gonna say is market maker is gonna have to take a compromise, and I will also tell you that I believe that this liquidity that used to be here at 73, probably it was bigger than the one we have now. There were many more players, even in the views. You know, I used to have some videos around here that were making 15,000 views in a single day, and probably the best day was like that, whereas the best day here is a fraction of that. Therefore, the liquidity that there is here is not as big to say, well, can we end the bull market here? No, we cannot. There's just too much liquidity. We need to go into 1, 2, 3. And what about here? Well, we went already into 1, 2, 3. So half 2 and 3 are left. We're building new ones, but I don't think they are as big as before. So if we want to call for a compromise, market maker could use this double top and say, I'm done. Let them win, whatever. It is possible. That's what I'm trying to say. It is likely. I don't know. I don't know really. HH, appreciate your view on gold to Bitcoin rotation and overall cycle continuation and topping signals at this moment in time. Yes, I have pending to do that. Let's try to do a Solana video today as well. General markets, and maybe I can do the ratio if I'm quick enough and I don't talk too much. 107 still, the CME gap is there. That is 107 200 roughly on Binance. Still open, just pretending like they're gonna go there, then getting front run, another high, and then we're back to the same area. I'm always building something, and I'm using Vibe coding, using Cloud Code, and I put out this proof of concept, which is the first time I'm gonna show you publicly. My Patreon community has been receiving this daily digest for about 2 days, I think, in a row already. And what this is all about is a report that I run every morning around 6 a.m. that targets around 40 YouTube channels in the crypto space. And what it does is create an executive summary of everything that was said across all those channels in the past 24 hours. Give me some metrics, give me some charts that are important, which ones got more views, which ones were a breakout of a topic, and then I can identify what were the biggest topics covered in all those YouTube channels in the past 24 hours. I can add new channels to this list, then I can get a ranking of videos and a ranking of market topics. Each one of them I can sort them by engagement, total views, relative performance. I can have the key points of each video, summaries, and again, absolute metrics. All of this pulling data from the APIs of YouTube and other APIs that I'm actually paying for. And you can see, I get to know everything that's being said, sent directly to me. And I'm still thinking whether I'm gonna send this forever to all my Patreon community. If they really use it and they find a use, possibly yes. Otherwise, I'm gonna just keep it for me to pick topics that I'm gonna cover in the videos. And here you can see what were the topics that got most videos. Bitcoin critical support 107, 108. We got 5 videos and a 80% consensus. People are saying the same thing about the support of 107, and that is already an alpha. This one is a bearish one, because if you get consensus of every single stupid video across 40 YouTube channels that cover a total of almost 1 million people, and they are feeding them with the idea that this is support. Is it really support? Well, these tools are paying itself. Ethereum, the 4,000 resistance, then you get more topics, you can expand the topics and then get the summaries, and you can go straight into each mention or thing that was said, and if you click there, it takes you to that video at that time. Mwah! Beautiful. That was built just by me and Claude Code during about a week, whenever I have 1 hour after parenting and running this baby channel as well, then I do that. You want to have a look at the report today and tomorrow, join my Patreon. For our daily, weekly and monthly, I'm gonna give you the Bitcoin status that is obviously not shared already in my Patreon community. We are officially in the noise land on the 4-hour time frame. There is just so many fake outs that is impossible to count them. Every time we get a fake out, then we get another one and then another one to the opposite direction. And this means that the 4-hour is expanding. We already switch on the lighter and we are about to throw it on into a lot of gas. And that is gonna blow possibly up until daily, weekly, or maybe even monthly time frame in terms of volatility. Are you ready for that? I don't know. I am. Daily, 37 RSI support was reclaimed and is still holding. We haven't yet broken the daily. Even with the comeback to the scene of the crime, still holding the breakout. We need to look into that, and on the monthly we are below support. Let's start with the 4-hour. This is the whipsaw that we're talking about. You could have moved this line here and you get another breakdown. You could have moved this line there and you get another breakout. So we no longer count layers. I'm not gonna say we are in the layer 34 because it doesn't make sense. I'm just gonna say that we are in the middle of a whipsaw and we are trying around this noise to identify the actual direction. In terms of probabilities, what is that direction? If we are being squashed by anchor VWAPs to top and bottom, and the 4-hour saying, no, I'm going here, no, I'm going there, no, I'm going here, no, I'm going there. What's the answer? You tell me. Go to the next time frame. Up. Yeah, that's always the answer. And reminder, 116 is a neckline, and it's a neckline for a larger pattern in here that is a bottoming pattern. So if we can get across that level of 116 and beyond, we are pointing towards 130. So pay attention because that is on the table and there is a 50-50 that we can go there. What matters is not, oh, it's gonna go up. He's saying it's gonna go up and down. Oh, there's no fucking value on that. Oh, what did I say? I didn't say anything. I say ducking, by the way. There is no ducking value. I'm trying to play with the YouTube algorithm. I'm gonna have to put that this for not for children, the video. Anyways, let's look into the daily. You see, I'm not gonna be able to do the ratios video if I continue at this pace. 40 RSI in here is higher than 34 and it has reclaimed the green level there. That is the bullish event, and it's also bullish that we haven't done a lower low, that we are kind of teasing with another expansive wave into 50 on the daily. For that, we need to hold 37, I will say. We can get to 36. Yeah, that's still a higher low. We don't want to go below 35. So let's put those levels of the wishful thinking in here. We have that 35 that we don't want to break below. That is 104,350 on a daily closing basis. We can go lower than that, but we need to come back before we close the candle above 104,300. And then we got the area 50 that we are speculating very naively that we can get back into 113 on a closing basis. Notice that we were already there, but just pinching. We closed below 110.5. So closing above 113, that sets a different picture because the RSI starts putting a bullish, fully formed structure. High, low, higher high. And after this move down into below the green, that could bring the MACD daily bullish cross too. At that time, people are going to be extremely bullish out there. We will be possibly, hopefully, crossing fingers, already allocated in a long, and they're just going to be wasting time. On the weekly, still looking pretty ugly in here. As you can see, we close a weekly candle below support, and then we came back to retest. So we got everything ready for a move into the technical target 88. But every day I say that in the bull market, we tend not to achieve the full technical targets to the downside on weekly patterns. This is a weekly pattern, it's a head and shoulder. So if we are still in a bull market, I am tempted that maybe the pattern could survive up until 100, 101, and if it's still a bull market, we should bounce from there and turn all of this into just a bear trap. This is how it looks, the bull market support band. We are in the middle of the squeeze on the weekly there. Biggest volume is 96, 97. Reminder, point of control as well of all this range is that. Still dominated by people selling at a loss. The SOPR, that is a bull signal for Bitcoin, not as bullish for Ethereum, which is still showing people taking profits in the green. So maybe people that enter here or before are now taking profits in the green, and that is damaging a little bit the short term of Ethereum. Not as much as if we were this high there, but certainly not as good as if we were selling at a loss on Ethereum, which is achieved the closer we get to the lower band. And last night we put another leverage squeeze sell low quality signal in here that also play out. We are below the support on the monthly. I'm not gonna get tired of saying that because it's just too important. If you don't know what it means, watch 2 or 3 videos back in time and you're gonna find the explanation. Since so many people are talking about the long-term holders selling, I wanna quantify that to get an idea. This is a data-driven channel and we don't swallow just tweets because someone says something. We need to go into the data and quantify it and understand if it's really that dramatic. What are the expectations that we should be having about long-term holders distribution at this point in time in the cycle? We should be expecting that is a peak, right? But we should not be expecting the biggest peak, right? That happens in the early stages of the market. Long-term holders distribute like chicken. They are cowards. They exit at 30, 40K in the previous cycle. Price went into 69 and guess what? They were reaccumulating in here and they distribute again sharply from 10% back into this area. But look at this peak. That is the last peak before going into the bear market. And look at what was happening at 69. Do you see a peak of distribution? No, very silent. So when you see a peak in here, what do you take away? I take away that this is not the ultimate get out of the market signal yet by itself. There can be other sources of data. I'm not telling you an overall picture of the market. I'm just focusing on this indicator. Is this indicator saying get out of the market? Well, in here didn't say anything. The distribution occurs from long-term holders earlier, before the market peak, okay? More, even closer to when they were accumulating again, or when they got done with this accumulation, they got the last leg up, and that, guys, is their exit. That point there is get out. They're distributing, they don't have conviction. This is your dead cat bounce, out. Now, let's focus on where we are. You can see that it got into a peak of red. We could say it's the third wave of long-term holder distribution going on Bitcoin. Yeah, it reached 3%. This one reached 10 and that one there reached 13%. If we put an imaginary line, it could go slightly higher with more distribution, but let's see in the next few days how it develops. Still liquidating longs. We are in an area of liquidating longs. We are in the middle on the oscillator, so we don't have full permission to take long or short from that indicator. Not understanding, watch my previous videos. We are below the short-term holder realized price. We still have a lot of panic, but yesterday, as I told you, as we approach 113, what could happen? Well, short-term holders enter the break even after being in pain for a full week, after coming out of a 20 billion liquidation. What do you think they want to do as they approach the line the first time? Have a look at this area here. What did they do the first time they approached it? They sold. Oh, wow. What happened yesterday? They sold as well. As we approach 113, they sold. That's kind of psychology. This in here is not the exception. First time approaching it after coming from below, sell off, sell off, sell off. Are we gonna get another sell off? Well, we haven't taken the low. Yes, yet. And we got also 477 inflow on ETFs. And that acted as a cushion when we came back to the CME gap, I believe. We are in extreme fear. We're looking for longs. We are about to settle a warning buy on Cerberus, which I really respect as an indicator since around 2021 that I built this one. You can watch my tutorials. They are for free in the area of playlists in my channel. You're gonna find like 20 tutorials including this one. Here is the short-term liquidity from 101 to 100. Definitely the biggest, more than 103, more than anything that is above, unless we put in the picture in here 130. That's where the big boss at the moment appears. But still, even if I see this big liquidity, I cannot tell you for granted that we are gonna move first $18,000 up versus just going 7 or 8 8K down and liquidate 100, or maybe we can go 10K down and we liquidate up until 97. So it's very difficult because it's a trade-off with the size, the volume versus the distance, and all the effort they need to put to move that amount to get people liquidated. On the longer term, you can see those important buckets of 95, 85, 73, 67 are still there. We have a new addition in here. Oh, look at that cute baby. That's 127.5. That is adding to the fire of the top end. The more they add, answering the question from my patron, the more they add in here, they're gonna make it more difficult to look away from that liquidity and let the shorts win too much. Okay, you need to think that they have to take a compromise and let them win, but they cannot let too many win because they are the house, and not just because of that. These shorts are gonna take profits. When they take profits, if there's selling pressure in here, that can act as a magnet again to the upside. Those are short positions. With a market close, it attracts the price up as well. Liquidity of the past 3 months still accumulating slightly above 90 into 95. Largest pools of the last part 30 days, 116.5. That is the one I'm salivating for. And now we have 123.7 sitting right above the price. There hasn't been major liquidations. We have the 100K in the order book sitting there very heavy with 38 million, and I have 36 million at 115. Brown wells leading with the orange again, the smallest and the largest together. So I wonder if they are doing some mechanism of swap to hide themselves in smaller orders of $100 so that Brown can still lead by being quiet. Just an interesting thought. The purple wells sold big at 113. Look at that sharp move there. That is them taking profits sharply after having been exposed small long there. And that's how they dump right there. Those were the purple wells dumping on you and on me as well, because I got stopped out in a small profit. 130 continues to be the biggest liquidity with 55 million. Let's look at Binance in here. We have an order at 118 is the largest order. What the hell is that doing there? Are we going to 118? Well, that will be phenomenal. I feel like they're just spooking anyways. There is a buy order of 1,000 holding the CME gap. That is the current interest to fill the stupid gap that is at 107.2. Let's make this 100 blocks. So let's see where is precisely located the biggest. So yeah, we have some liquidity in here, but the biggest is 107.5 precisely. They are not placing it at 107.2 because they are dumb. They don't know that the price is different than CME. The CME gap is at 107.2, not at 107.5. That's the premium of CME. My God, you never finish teaching. I love teaching. I'm not moaning. I taught in the university for years and I really like it. Shorts are closing some positions. They haven't come back. They got hit in here. Some open interest came back down. Longs continue to add little by little. Now they are on a swing low, but we have a new high of longs. So with this long versus that long that people took, this one attracted more people. And in the order book, they place right there resistance at 114. Okay. Remember I was talking earlier in the video, can we go into 115? That's slightly beyond that resistance. We got a tough resistance at 118. Let's see if they're expecting a new move up into their next instead of 115. There is open interest at 115 as I showed you earlier, but there is a huge order of resistance of 118. Below the price, we got the 100K support and a bunch of other levels around it. This is if you want to see again the open interest. Remember 115.2, 113.7 and 111.2. The biggest ones, let's remove a bit more. Yeah, those are the biggest ones at the moment. Longs are in slightly more risk at the moment with 183. That could potentially be the narrative to move into the CME gap, because liquidating that probably moves the price $500 to 1,000. Not a lot of yellow in here, but when the price was at the highs, there was rarely any support. This was at the percentile 0, so that means that support that got rack pulled, or it means that resistance just was too hard to beat right there at 113. And then support came in the opposite way. 100 percentile, they were literally defending with everything they can, priced to not fill the CME gap. What the hell? So much coordination it requires to do this. I cannot swallow that this is just erratic traders combined. This is someone riding this thing like a pro or an organization. We're back into 69. Yesterday I said when there is too many longs in here, you get another wave and another wave. We're trying to break that 70. Yesterday I gave you the alpha at 69 and we got the rally. Now we are slightly higher, almost 70. So we could get another rally. We could miss the entry for the long. There is a risk of that. We are in extreme fear at the moment and we got all these fair value gaps. Guys, I'm gonna record now a summary and I'm gonna share it with my community in Patreon and my separate community in YouTube. Members, you can join either to watch that video. It's gonna be just 2 minutes explaining what I already said, but in a condensed way, more action oriented decision making. Thanks for watching. I'll see you in the next one. Bye bye.